Pump.fun just dropped a bomb on the market. $1 billion fundraise at a $4 billion valuation. In a single move, the project behind 11 million meme tokens and 700 million in fees signaled that the meme coin mania is far from over. Or is it? The second that news hit, Solana's price instantly cracked. Perhaps you saw it. Telegram channels lit up. Suddenly, everyone's asking, is the fun about to end? Or is this just the first domino in a much bigger game? But here's what almost everyone is missing. While the headlines obsess over meme coins and hype, the real money is quietly repositioning itself in the shadows. This week alone, hundreds of millions in fresh stablecoins hit the system. ETF flows surged, and whales made moves that barely made a blip on Twitter. In the next few minutes, I'll show you exactly what's happening beneath the surface, why what's happening right now matters for your portfolio, and how to get ahead of everyone else, ahead of the herd before the headlines catch up. So if you want to stay ahead, stay early and ride the next wave before everyone else catches on, because at that point it's too late. Just like the video, share the video with a friend or family member that needs to hear this, and definitely subscribe if you have not already. And let's get into today's show. So first, let's go into detail regarding the Pump.fun fiasco. Let's talk openly about what's going on with Solana and the Pump.fun situation. Pump.fun exploded into popularity as a massive sort of retail casino. 11 million tokens, as I was saying in my intro, were minted. 700 million dollars in fees were generated, a slick new mobile app, MetaMask integration, and by most standards, it looks like a retail success story. But there's another side, a darker side to Pump.fun. Most of those fees never made it back into Solana's ecosystem. They converted into stablecoins, taking capital out rather than reinvesting it back into the Solana ecosystem. Now, Pump.fun announced they're raising another $1 billion at a $4 billion valuation. Important details like token economics, community incentives, or even clarity about profit redistribution are still missing. Revenues are down sharply, roughly 86% from their February peak. All even though Bitcoin recently touched new highs. Raising money at this moment feels like insiders looking to secure an exit as retail enthusiasm fades. You saw it reflected immediately in the market when Solana crashed from 161 to 156 right after the announcement. And here's why this matters. Short term, it disrupts the narrative that Solana directly benefits from meme-focused activity. Once Pump.fun launches its token, capital might temporarily rotate from Solana into it, chasing potential quick gains. But historically, moves like this tend to be short-lived. Everyone tends to buy the rumor and sell the news quickly. Once the short-term rotation plays out, attention usually returns to the broader ecosystem. Ethereum might benefit from this shift, absorbing capital as people diversify. For the overall market, though, these rotations can be healthy, balancing speculation with more stable growth. Long term, however, Solana remains one to watch. Real builders, new applications, and serious investments continue flowing into Solana behind the scenes. If the Pump.fun news sparks fear or dips in Sol's price, that could present good entry points for patient investors. I'm personally watching closely around the $150 mark for entries. I think at those levels, Solana is a bargain. Smart investors pay attention when markets get noisy like this. The next cycle's major winners will come from ecosystems focused on building real products and creating genuine value. So keep your eyes open. Moments like these are exactly when great opportunities emerge. Next, let's get into and talk about the stablecoin surge that's going on right now, because here's where things get even more interesting. While the market is debating whether Pump.fun marks a top or a bottom, the retail fuel has been pooling in the background. This week, Circle, one of the most important companies in all of crypto, upped the ante. They're now targeting a $7.2 billion IPO after their investor books came in multiple times oversubscribed. That's super bullish for Circle, and it's public market validation of stablecoins themselves. And the data backs it up. According to DeFi Llama, stablecoin supply just in the past 7 days jumped by nearly $1 billion. Binance now holds almost 60% of all stablecoin reserves on exchanges, and every new USDC minted is dry powder. Fresh capital sitting on the sidelines just waiting for an excuse to pounce. Stablecoins are the gasoline in this market. And this week, the tank got a full refill. Everyone who's watched market cycles knows that stablecoin surges often precede a rally. Now let's talk about the institutional wave of money and smart money and what they're doing. So if you're thinking, Jess, that's just retail and on-chain flows, show me where the smart money is moving, then let's talk about it. Let's talk about the two elephants in the room. First up, Trump's Truth Social media company filled a spot Bitcoin ETF with the NYSE this week. So yes, you heard right. A former president's media empire wants its own ETF. And that's just a tidal wave of attention and legitimacy. Just imagine that ticker running across Fox News, across CNN, across every major media outlet. Bitcoin has become front and center in the US political and financial conversation. So if that wasn't enough, BlackRock was caught on chain quietly accumulating nearly 50 million in Ethereum. The world's most influential asset manager is front running the ETH narrative before the crowd even wakes up. And why is this? It's precisely because everyone is betting that a staking enabled ETH ETF is next. And that means yield and appreciation. Two things these massive institutions absolutely love. When the crowd is uncertain, the institutions go shopping, guys. That's the real game. I hate to say it, but sometimes I think the whole crypto space is now retail for the institutions and the politicians changing and running narratives to scare all of us. Anyway, that's just a personal theory. Now, let's start talking about what's going on in Asia. Eastern inflows, okay? Because just as the West, right, or the US, is bickering and hesitating, the East is stepping on the gas. In South Korea, nearly elected President Lee Jae-myung, I hope I'm saying their name right, who has been openly pro-Bitcoin, mind you, now sits in the top chair. He's promising friendlier rules for exchanges and custody. And his win as the next president of South Korea signals the opening of a massive new channel for institutional and retail flows in Asia. So there's going to be more money and liquidity coming from the South Korean and the Asian markets because it's like a domino effect, right, across the other Asian countries and markets. All while at the same time, over in Tokyo, Metaplanet, the equivalent of Strategy, Michael Saylor's company, that's a company making big bets on Bitcoin as a corporate treasury asset, just became the most traded stock in Japan, topping even national icons like Toyota. Asia is done waiting for Washington's blessing. That's what this says. They're plugging into crypto rails, and the capital outflows from east to west are about to accelerate because it'll have a reverse domino effect on the West. It's going to peer pressure the West and the US to hurry up. So if you want to see where the liquidity waves start before they hit the US market, US shores, watch Sol. and Korea. Watch Tokyo. Next, let's shift gears a little bit. Let's talk about the rails, whales, and the infrastructure of these inflows, because there's big news this week. Robinhood just finished buying Bitstamp. That means one of the most popular trading apps in America is now connected to Europe too. Suddenly, it's way easier for both regular people and big investors overseas to trade crypto with just a few taps on their phone. But here is something even more wild. Tether, USDT, the company behind the biggest stablecoin arguably in the world, quietly moved more than 37,000 Bitcoin, almost $4 billion, over to Jack Muller's company, 21 Capital. With that one move, 21 Capital became, or has become, the third biggest corporate holder of Bitcoin in the world. Talk about chess mate, or close to it. This isn't just a technical transfer. It's a huge signal that the biggest players are making major moves, and they aren't shy about stacking up more Bitcoin. So if the market feels slow or boring to you, look a little closer. These kinds of moves show that things are heating up behind the scenes, and the big players are getting ready for whatever comes next. I even think they may be manipulating the market, trying to suppress it, artificially suppress it, so they can continue buying Bitcoin on a discount. That's a theory. Okay, but anyway, let's keep moving on and let's talk about the cycle psychology. Okay, belief versus boredom. So why do so many people still feel uneasy? I'm sure you've heard it or felt it. Why is there so much disbelief in the air when every signal that matters is pointing in the opposite direction? Let's look at the technicals. Bitcoin is currently breaking out of a descending wedge. If it holds this level, top analysts like Titan of Crypto say $135,000 is the next realistic target for Bitcoin. Ethereum? Cycle veterans like Bob Lucas are targeting a $3,200 ETH on the next leg up. And the monthly RSI is still sitting right at 50, a historically bullish spot that always shows up before the real fireworks start. It's classic cycle psychology, guys. When the charts go flat, when the headlines get boring, when everyone wants to step away, that's when conviction counts. Like is mentioned on yesterday's show. Imagine a spring or a slinky being compressed, ready to pop at any moment. And when it does, the move will be massive. The longer it's suppressed, the bigger the explosion. Lastly, let's talk about the payoff moment. Let's bring all of this together. In just 1 week, Pump.fun fired the first shot, hinting at $1 billion raise. Stablecoins have been surging, flooding the system with new fuel, new liquidity, new money. Institutions moved in silence. BlackRock, Trump, and the other major whales are loading up ahead of the next run. And all across Asia, regulators and corporate giants are racing to get exposure. Most people will miss it because they're staring at the wrong signals. They're listening to the wrong people. That's why I'm happy you're here. They're waiting for the news to tell them it's time. That's what's so awful in the way we were raised, this whole factory mentality at our school systems of raise your hand to speak, walk with your hands behind your back, don't offend anyone, listen to the teacher, and don't think for yourself. That translates later into our adult lives, and that's what's wrong with people. They're waiting for the media to tell them, oh, it's time to invest in crypto. They're never going to say that to you because they don't want you to invest in crypto and in Bitcoin and break away from their system that's designed to keep you like in a trance, keep you dependent on the system. But in crypto, it's about taking your own responsibility, doing your own research, as you may have heard everywhere. DYOR, do your own research. Be your own bank. That's what crypto is about. Take personal responsibility for your finances. Because by the time you feel safe, it's going to be too late. So I'm happy you're here. Once again, share this video with somebody that you care about and that you want to help transform their finances. Because here's how I'm thinking about it. I'm stacking Bitcoin on any weakness while this breakout holds. I'm adding ETH. I'm trying to buy more ETH whenever I can, because when that staking for ETH lands, the floodgates will open. And I'm also trying to accumulate more Solana around the $150. And because we have to take advantage of the fear Pump.fun is instigating and sparking in the crypto space, I'm tracking stablecoin flows and Asian capital, because every cycle, those are the currents, okay, that lift the entire market. Although this cycle, I don't think all altcoins are going to pump, mainly the new ones and the blue chips, okay, the good ones. That's why you need to follow my channel, because I will be going through all of the top blue chips in every ecosystem. Liquidity is coming. You don't want to be standing on the sidelines when it arrives. So if you haven't already liked the video or subscribed or shared my content with your friends and family, frankly, that means so much to me if you were even just to share my video, okay? And let me know in the comments who you shared it with. And remember that in crypto, it's so vital to stay plugged into the news. Anything relating to finance and the crypto markets, you have to stay plugged into the news. That's like lesson number one, because what happens on the macro political level affects the economy. So that is your homework. Make sure you're following the news. Make sure you're following my channel, because that's my commitment to you, to bring you the news in a way you can actually understand and understand the implications of the effects it will have on your portfolio. Anyway, guys, I love you very much. That's a wrap for today's video, and I'll catch you in my video tomorrow. Take care.